This is Alan Bush with the Daily Financial Forecast for Tuesday, July 31st. Stock index futures firming with personal income coming in better than expected. But the big surprise, however, was more recent news that talks between the U.S. and China may be resuming, so that helped the indices to advance to new highs for the day. Overall, stock index futures have been performing very well in spite of the ongoing trade tensions globally. Moving over to the currencies, the dollar index was a little bit lower, but now firming up with these reports that talks between the U.S. and China may be restarting, so that a positive development for the dollar index, at least temporarily. Although I do believe that interest rate differential expectations in the last few weeks have turned a bit more negative to the dollar and a bit more positive to the euro currency. Quite a bit of pressure coming into the Japanese yen after the Bank of Japan at its policy meeting today basically made moves indicating that they want to keep interest rates low. In fact, they do have their short-term interest rate at a negative 0.1%, and they are maintaining that, so that undermined the Japanese yen. Some analysts think that this may be done for competitive trade purposes. Of course, the Bank of Japan would not say anything of that nature, but it appears that the trade wars are ongoing. Also now moving over to the interest rate futures markets, somewhat higher prices, although gains seem to be limited by the personal income coming in higher than expected. Also now with trade talks maybe likely to resume, that is likely to put some pressure on the interest rate futures markets. So even though the bonds are a little bit higher today, of course bouncing from a 10-week low yesterday, I think that this rally should be sold in the bonds. Nothing has changed in my long-term view. Still looking for the Fed to raise 1 or 2 times this year, 2 or 3 times next year. The U.S. economy to continue to improve, all of which are bearish fundamentals for the 30-year Treasury bonds. So rallies, I believe, should be sold in the interest rate futures markets. So good trading, everyone. And once again, remember, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.